One of the problems with recruiting for investment banking is not the knowledge or skills you acquire, but the access to talk with real investment bankers to put your best foot forward. Our sponsor, WSO Academy, can provide those connections with 60 head mentors who are finance professionals at top firms like Goldman, Centerview, and JP Morgan. Imagine being able to get on the phone within 24 hours with one of the Academy's 1,300 mentors right before a critical interview. Get on the waitlist for WSO Academy today by clicking the link in the show notes or by visiting wallstreetoasis.com/academy. All right. Welcome to Investment Banking Insights. My name is Alex Mason, and I am your host. This is the podcast dedicated to helping you explore and understand both the technical and non-technical aspects of investment banking. And hey, I'm not claiming to be an expert here. I am walking down this journey just like you, trying to understand these concepts, but sometimes the beginner perspective, I think, can be more helpful than the expert perspective because there's a certain way that you think about things sometimes, right? Have you ever had someone who is an expert in their field try to explain something to you and it just sounded like a bunch of jargon? Well, that's what I'm trying to avoid here with this podcast is I want to explain things to you as I'm learning them in plain language in order to enhance both of our understanding. So that's what we're doing here on this show. We've been going through a lot of the accounting fundamentals in previous episodes. We just finished up talking about the balance sheet. And now we're going to go ahead and get into another awesome financial statement. Remember, there are 3 financial statements: balance sheet, income statement, and cash flow statement. And now we're going to talk about the income statement. So we've talked about the balance sheet, and the balance sheet, remember, is what a corporation owns versus what they owe. It's an accounting of ownership and liability. That's what the balance sheet is. So what is the income statement telling us? Well, the way I like to think about it is an income statement helps us answer the question, after all revenue and expenses have been accounted for and the books have been settled, how profitable is this business? So to sum it up quickly, it answers the question, how profitable is this business? And we're going to be breaking down the various aspects of the income statement, but this episode is just to warm things up a little bit and explain the basics of what it is. So we're talking about this concept of profit and loss. Now, you may also hear this financial statement referred to as the P&L or profit and loss statement because it literally just records how much profit a corporation makes, or in some cases, if things aren't going so well, or maybe the corporation is intentionally not making a profit, which is a whole nother scenario entirely we're not going to get into, if it has a loss on its income statement. So either call it the profit and loss statement or the income statement. Now, here's what the income statement doesn't tell you. It doesn't tell you anything about ownership, right? Because remember, that's what the balance sheet is for. And it also doesn't tell you how much cash the company has or when it gets cash. That's really for the cash flow statement. The income statement is focused on profitability. And so there's a couple of differences here of cash flow versus profit. And we'll get into that when we talk about cash flow. But mainly, I want you to understand this financial statement is focused on profit. So at the top, you have revenue. That's also referred to as your top line. And then at the very bottom, you have something called net income. Net income is just another way of saying the profit that a business makes. So literally the income net of all expenses. And there's a whole bunch of things that happen between the top line and the bottom line, but that is the essential concept. So if you own a business that makes $100 million in revenue a year, you don't get to keep all that, right? You have expenses related to your business in order to make sure that it functions properly. So you're paying people salaries, you're buying inventory, you have vendors of various types, and then you have your taxes. Maybe you borrowed money, maybe you're paying some interest. There's a lot of things that you have to pay. But at the end of the day, you want to be profitable. You want to have some money left over on the bottom line at the end of the day. So that is what the income statement is for. So, from a very broad sense, how do we arrive at this concept of net income? Well, I just named a couple of examples of expenses, right? That kind of stand between a revenue that a business generates and the profit. So, out of a business making $100 million in revenue, maybe it makes $10 million in profit, let's just say, for the sake of example. But what is the actual equation of how we can characterize this? Well, there's kind of two different components of this equation that add up to get net income. You have the things that flow into the business that contribute to profit, and then you have the things that flow out of the business which detract from profit or contribute to loss. So at one side of the equation, you have your revenue plus any gains that you have. So revenue, it's a very simple concept, right? It's your sales. How much have you sold? It's the lifeblood of any business. If you're not selling anything, you don't have a business, right? So revenue, that's what that is. Gains. What do I mean when I say gains? What I mean is when you sell something for a profit. And particularly, I'm talking about some kind of an asset. So not the main business of the operation itself, but let's say a business owns a piece of real estate and then sells it at a profit. Well, that's not part of the normal course of business unless the business is, of course, a real estate business. But if you're a pizza franchise and you go ahead and sell some real estate, well, you just made some money, but it didn't have anything to do with selling pizza. So that would be recorded as a gain on your income statement. And so this is how you can begin to see the linkages already between the financial statements, between the income statement in this case and the balance sheet where you're disposing of a real estate asset. So that's one part of the equation, your revenue plus your gains. And then on the other side, it's just literally the inverse. So what's the opposite of revenue? Well, you have expenses. You have things that you need to pay for in the normal course of your business. To use this pizza franchise example, what would be some normal expenses that we would have? Well, we need to buy the ingredients. We would need to lease out the space. We might need to hire some attorneys to draft some documents for us. Those are expenses related to the core operation of the business. And then you have losses. So this side of the equation is expenses plus losses. So what are some examples of losses? Well, maybe you bought some real estate for your pizza franchise and for whatever reason, you had to sell it at a loss. You didn't make money on it. You lost money on it. So those have to be accounted for here as well. So if we put these things together, we get the equation for net income, which is the ultimate outcome of the income statement. So net income equals your revenue plus your gains minus your expenses plus your losses. So net income equals revenue plus your gains minus your expenses plus your losses. Fundamentally, what you made minus what you spent equals your net income. And that is fundamentally what the income statement is all about. And we're going to get into the nitty gritty of all of these terms because there's a lot of nuances here that are important for us to understand as people looking at investment banking. And we're going to need to understand financial transactions at a very detailed level, as well as at a high level. So we're going to look at both. But that's the basics of the income statement. Next time, we're going to be talking about some more aspects of the income statement, getting a little bit deeper into some of these terms and introducing some new terms that you're going to need to know as well. So join me next time on Investment Banking Insights. My name is Alex Mason, and I am your host. I'll see you next time.